Okay.
Roll call, please.
This is the
I know,
council
we're good.
work session. Mayor Ellison.
Here.
Tom Baylor.
Here.
Kathy Sherman.
Here.
Jeff Gard. Again.
Just say here, so I can, he's
Okay.
here.
Okay, got it.
Say here.
He's on teleconference. Melina Meyer. Absent.
Here.
Oh, Melina Myers. Here. And Schaefer is absent. Kristen Carpenter.
Here.
And Ken Jones is absent. That's a quorum of council.
Your work session topic is 21 city financial audit. We'll turn it over.
Okay, great, thank you so much. So with us here this evening is Jim Newhouse. He's a principal with Newhouse Vogler, who is a new CPA firm that we're using and contract. And he's going to go through the audit findings and talk to you about any concerns you might have and things that he's noticed. And I'm going to turn it over right now. He's got a screen shared up above, as all of you are. You may have copies of the audit. You can ask us any questions. Thank you. Jim, are you there?
Yeah, I can barely hear you. Sorry.
Okay.
My turn?
Yes, thank you, Jim.
No worries. Good evening, everyone. I'll jump right into it. When I present financials, I don't like actually presenting the financials because there's, for you folks, it's over 100 pages of information, and I like to give a synopsis of the audit. And typically, folks that are council members that are well informed really don't need the in-depth analysis from year to year. Why did travel change by $1,000 this year compared to last year? Y'all don't need that. So consequently, we typically do a PowerPoint, just kind of a synopsis of the audit and what an audit is and also what an audit isn't and how it went. We issued an unmodified opinion on the financial statements. Unmodified means basically a clean opinion. We also had to do a federal single audit this year. We looked at the USDA and Department of Interior as major programs. And basically we tested those for compliance requirements under both USDA and Department of Interior, as well as any compliance supplements identified under those programs. Those were listed as major programs on your single audit report, which is in the back of the financials. Just a second. We also issued a lot of
We've lost your voice.
Pardon me?
There you are.
Okay. Did you lose me for a minute?
Yes.
Sorry. Really, there's the only item that was noted during the audit, and I talked with Helen about this, and as well as Jim, I guess the new interim finance director. You have a net loss on the enterprise funds, which means, when I look at this, I look, okay, why did you have a net loss? And essentially you had $1.9 million of depreciation expense within the total enterprise funds. And essentially what that means is, if we looked at it just on a cash basis, you'd have a net income of, $300,000. But since we look at this on the full accrual method of accounting, where we have to record depreciation expense and consequently accumulate depreciation on your capital assets, then we also have to recognize the depreciation expense of $1.9 million. seems like a lot, and it is, but you also have to look at, what drives the bus on this. And you're sitting at, just a second, let me jump over to financials. Excuse me. Let's see. For total assets under the enterprise fund, you're looking at almost $74 million of capital assets, and with accumulated depreciation of $45 million. So that's a net of almost $29 million of capital assets that you're looking at depreciating. And so, that $1.9 million of depreciation expenses is significant, but it's a non-cash item. Means that that the city didn't expend that during the year. So essentially, it's a non-cash loss. You have a change in net position of $1.3 million total for all of your enterprise funds or your business activities. Are there any questions on the enterprise funds? Okay. I'll jump into the auditor's responsibility. Our responsibility as auditors is to form and express an opinion about whether the financial statements that have been prepared by management with the oversight of the City Council are presented fairly in all material respects in conformity with generally accepted accounting principles. We are also charged with planning and performing the audit to obtain reasonable but not absolute assurance about whether the financial statements are free of material misstatement, whether caused by fraud or error. Because of the nature of the audit evidence and the characteristics of fraud, we're not able to obtain reasonable but not absolute assurance that material misstatements will be detected. Just a second. When we're evaluating the audit, we evaluate whether the city's controls sufficiently address identified risks of material misstatement due to fraud, and controls intended to address the risk of management override of other controls. We also communicate in writing all significant deficiencies and material weaknesses in internal controls identified in the audit, and reporting to management all deficiencies noted during audit that are sufficient importance to merit management's attention. We conduct our audit in accordance with professional standards, both through the AICPA, FASB, GASB, and pretty much every other regulatory body. Management and the council essentially are responsible for adopting sound accounting principles, presenting the financial statements conforming with generally accepted accounting principles, establishing and maintaining effective internal control over financial reporting, identifying and confirming that the city complies with laws and regulations applicable to its activities, making all financial records available to the auditor, and providing the auditor with letters confirming certain representations made during the audit that include but are not limited to management's disclosure of all significant deficiencies, including material weaknesses in the design or operation of internal control that could adversely affect the city's ability to record, process, summarize, and report financial data, and acknowledgement of their responsibility for the design and implementation of programs and controls to prevent and detect fraud. I know that's kind of a mouthful, but essentially what it comes down to is an audit is not designed to detect fraud. About 15 years ago, they did a study of 100 instances of fraud that were identified. And out of that, I believe about 18% was actually identified through the audit process. About 43% was identified through whistleblowers within the organization. So, we look at a sample of account balances, and from them we make selections out of, we identify a sample that we're going to look at, and if everything passes the smell test and everything looks right, essentially we move on. If we start looking at the samples or looking at transactions inspections and there start, being deficiencies or, things don't look right, then we dig a little deeper. So that's essentially what comes down to, what we do for an audit. Are there any questions on the financials specifically? And we also issued a letter to the city council. Essentially, this letter is rather boilerplated. Was that a question?
No.
Essentially, we also issued a letter to the city council regarding, what was expressed in the management letters, the engagement letters. It was pretty much boilerplate from our template issued by the ASCPA. If we had any disagreements with management, or if we had any issues with conducting the audit, we actually modify that report. But since there wasn't any issues in the audit, the letter is pretty benign. Are there any questions on that?
I do have a question. This is Kristen Carpenter on the phone. So I hear you say that the audit isn't intended, I don't know how you would it. It isn't intended to detect fraud. It's possible there could be fraud and we wouldn't necessarily turn it off.
Correct.
The report that we got, the very last page or 2 pages has the checklist, summary of auditors' results and schedule of findings. So that's where you say, no material weaknesses and
correct.
All the things. But in the very beginning of the audit, and I'm not sure if this is what you call the management letter, I don't remember the name. There's
letter to management.
There's the letter to management. I guess I'm looking at, shoot, where I lost it again. If it was the report, there was some place where you said you found a bank account that wasn't on the ledger, and you found there was 2 or 3 other things. And so, how would you characterize that letter? I mean, that's not.
They're management letter comments. They're items that we identified during the audit that don't rise to the level of deficiencies, material weaknesses, or significant deficiencies.
Okay, but there are things you found that you noticed.
Correct. And we talked with Helen and Gavin at the time, and Brenda and Barbara and pretty much everybody else in the office. If we had issues during the audit, this is basically, what we identified, and then also we talked to them. And essentially, all these are, I would say, isolated incidences, or because we also like to make recommendations, best practices type stuff.
Right. Yeah, I'm not saying that I wasn't questioning, or I'm not necessarily concerned about those specific incidences. I was just trying to understand I think what you just said, they don't rise to the level of material weaknesses. They're things you notice, and they would call them out and they're worth noticing, but they're not going to ding us in the eyes of the other.
For example, you're correct. For example, one of the last comments, and we have this on just about every audit that we do, it's a collateralization agreement. It's a ridiculous comment, and this is speaking from the person who actually writes these, but it's required under our oversight agency to make sure that if a organization doesn't have a separate collateralization agreement or separate securities under their cash, then we need to have a comment. And 9 times out of 10, it's not cost beneficial to actually get a separate collateralization agreement. Because realistically, what's the likelihood that the financial institution that y'all bank at is actually, going to go under? And especially within the next year, it's unrealistic.
Okay.
But yet they still like to see that comment.
Okay. Thank you.
You're welcome. And I'm sharing the management letter right now. I don't know who else is on Zoom. Here's the board letter that I've talked about briefly. Again, this is really innocuous, just a waste of paper, because I mean, it really doesn't have anything of value in it. All these items, you know, we talked about the management judgment of significant accounting estimates, depreciation, landfill closure costs, allowance for doubtful accounts. These are all, you know, routinely hit upon in the financial statements. So it's, again, nothing. Usually, if we're going to have something, we would have, you know, difficulties in accounting performing an audit, or if we had material adjustments that we proposed during the audit, we would also include these in this letter. And then the one page that I really like to call people's attention to, it's actually page 97 of the financial statements. It's the summary of audit results and scheduled findings and question costs. When I actually propose an audit, this is probably the first page I turn to, because this tells me if the auditee or the audit agency, the company or their agency has had issues with their single audit or their financial statement audit, if they've had, you know, prior year unmodified or modified opinions on the financial statements, modified opinions on the federal awards, if they've had findings, you know, what were the findings? And again, going through this, you know, unmodified or unqualified opinion on both the financial statements and the federal awards. There were no deficiencies noted in any. Unfortunately, and then of course the major programs were identified for single audit purpose testing, and then whether you qualified as a low risk auditee. And essentially, you know, that's no, because you had findings in the prior year, and essentially if you have any findings in the last 2 years, then you cannot be a low risk auditee. And then the status of the prior year finding, which has been resolved for the fiscal year 12/31/21.
Okay, I don't know, Jim, if there's anything else you wanted to discuss, but if not.
Actually, one other item, I would like to just really thank Helen and the staff for helping us get this audit. And, you know, unfortunately, we didn't get down there until the second week of July. And Helen and all of her staff just they were really very diligent with getting us what we needed, and they were helpful and really did. I know I took up a lot of their time with asking questions and trying to figure out the processes, but they really walked me through the organization, and you know, that really does speak volumes for them and Helen.
Okay, thank you, Jim.
Thank you. This will be it.
Yep, I believe so. No other questions from council? No?
Are there any other questions on the financials or any of the other reports?
I don't think so at this time. We've got your number.
Okay. I want to thank you and have a good evening.
Okay, thank you.
Thank you.
Bye-bye.
Okay, then being no further business for the workshop, we will adjourn the workshop.